I think all of us have made the experience that, let's say I've made the experience, I don't know about you guys, I'm sure you've made the same. You're seeing someone else doing well or something works for someone else, and then you're thinking, okay, I got to do that same thing.
So you guys knew each other's businesses?
Of course. Yeah. I'm sure, obviously I was very curious about what Kuda's doing, and then he was also curious about what I'm doing. Then I wanted to know what he's doing. He wanted to know, okay, let me also do lending. It's the normal thing to do. And then we also look at who is doing what in Egypt, Kenya. In the end, the comparison set in Africa is small. My experience is very quickly, you're getting to a point that makes you appreciate the sophistication necessary in this business. Because if it would be easy, I always say this, if anything would be easier, I'll be doing it, and there would really be no opportunity, right? It would be easy to run a merchant acquirer.
Yeah.
And if it would be a gold mine, then everyone would be doing it, right? If it would be easy to give loans, then everyone would be doing it. If it would be easy to mobilize lots of deposit, and we're doing it,
Yeah.
So very quickly we realize, okay, this is actually hard, and then you fail, and then
you get it.
and then you get it. No, you fail again, and then you do a bit better. And there's a reason why we're doing this for 6 years. This man is doing it for 8, 9. This, when you're doing something, it's not that we're sitting there and do nothing, right?
Yeah.
Learn.
And how does that affect product diversification decisions that you make, and also expansion, right? Because I think it's hard enough to diversify product in one market, right? I think there's a question about Nigeria is a big country. It's pretty deep. I know that, to various degrees, you guys have been looking outside of different markets, thinking about trying to go deeper into, servicing a customer, building out what you're doing, different products in Nigeria versus then going abroad.
Look, everyone has thought about it, and I think my opinion is there's only wrong decisions, because you're dealing with a currency that you can't predict and that's doing really poorly. Right, so any decision I think that you would have taken, pretentious to talk about in hindsight as the right or wrong thing to do, because we focused a lot in Nigeria, and I was really, I didn't want to think a lot about expansion just because it's hard and you don't get it, and you speak a different language, and then they do business differently, and then you try to acquire them, and then the bank, and it's hard.
So I think ultimately it's a bandwidth question. So Naomi, you know what they say about focus. Execution is really hard. You need escape velocity to launch a product. And as a startup, you are starting up, you have minimal resources. And these resources needs to be devoted such that anything you focus on needs to reach its escape velocity. So it's a bandwidth question. And this is the fundamental reason why you need to focus. But usually what now happens is that when you mature a product, the bandwidth required to continue running that product reduces because it's matured, it's now an adult. It can take care of itself. You've gotten burnt, you've done everything, then you can focus on the next things to do. But the way to look at it, however, is a bandwidth, right? Because if you look at organizations like Amazon, Microsoft, Google, they launch products, shitload of products. Some fail, some succeed. They have large organizations, plenty of verticals. So this is not a question of why organizations cannot actually succeed at having multiple verticals. It's a question of bandwidth. And this bandwidth is about, one, your execution maturity in terms of processes, systems, two, investments you can make in terms of, capital into the product itself, as well as every other factors of execution or production that you need. So in essence, as a startup, where you're still battling with maturity of your core product and you have limited resources, to get escape velocity, you should focus on a few products. As you begin to grow and you have more resources and you've matured and you know how to do things, business as usual, then you can actually work on more products. Now, these more products can now be more products, different geographies, different products in different geographies. So I think that's the way to look at it.
I agree, on the bandwidth issue, but I think being a highly regulated entity adds a different level of complexity.
Yeah.
Because, the regulation are different in different countries.
Which complicates the bandwidth requirements. So that's essentially, because bandwidth is a complication, is a complexity solving thing. Execution is about fixing complexities. So because you now have multiple regulations in different jurisdictions, adds more layers of complexity. But assuming you've done it before, business as usual, you know the FCA, you know what they are looking for. You can do it again and again and again. It's not a big deal to you. then you can easily expand. So the real limitation that you have is bandwidth. And different organizations have different bandwidth. There are organizations that just manage to get to where they are. There are organizations that are really, really matured. If an Amazon said that they are coming to do my business in Nigeria and they devoted their bandwidth in Nigeria, I will be afraid.
I disagree with
No,
you.
no.
I mean, you should be worried.
No.
But I think you have something
Like I said,
that they don't.
Like I said,
You know?
they devoted their bandwidth to it. Because at the top, there are few important things. But because the bandwidth is so large, there are multiple things they're working on. At different places, the focus is different. It's small because it's kind of diverse.
Amazon would deal with CBN.
They will find someone.
That's what I said exactly.
But I think one thing I want to overlay.
Or they acquire. It's all about bandwidth.
Yeah.
Exactly. So it's all about resources there. That is the point about resource thing. We convert sweat equity eventually to capital. That's what we do. That's what the entrepreneurs do. But they have done it. They have shitload of capital. They don't, to execute it, they don't even need to do it. They just simply acquire.
But there's a lot of examples of companies coming to Nigeria from South Africa, for example, and not finding.
And they fail.
And there are also tons of, they also succeeded.
Yeah, there's both.
Yeah. So like I said, it's simply a bandwidth thing. Nigeria is complex, that's the point. Between regulation, markets, people, the resources required to execute it. But do you have the resources in terms of people, knowledge, processes, systems to be able to execute it? That's what's required. So if I want to expand to Kenya now, I am a little bit afraid. Like, Kenya is a matured market with the same level of complexities, regulation, capable competition, the bandwidth requirement to really succeed at that. Even if I took away all my things from Nigeria and focused on just Kenya, would I still have succeeded? So I think ultimately that's just the way to look at it. So that's the framework that can connect small startups expansion to big startups expansion. It's just a bandwidth.
Yeah, but you want to...
I want to just add one thing, because I think what Tosin is saying is an interesting way to look at it, but I think there's another complexity that we haven't talked about, and that's the point I tried to make on currency. Right? Because in the end, if you expand, in the end here, it's like a resource allocation question. And what you're really looking for is, I'm making this investment decision of time, he calls it bandwidth resourcing, right? My team's time or money. And I'm expecting a certain ROI on it, right? And so why I say...
Resources,
so I want an ROI. I want to either generate more revenue or get something for the story or whatever the driver is. Right? Yeah, there's different drivers. And especially, we talk about expansion. A lot of expansion is done to be able to say... but the point I want to make is, so why it's hard to take the right decision in Nigeria when it's about expansion is that, the fundamental input on output of resource is how much time do I invest and what do I get back. But if your currency is heavily unstable, you are actually it's hard to predict that output. Because you could spend a lot of time and the Naira is doing well and the product is proceeding in the business plan as you have projected it. So let's say we start a point of sale machine device business, or Tosin has tons of good people for lending, but because the currency is shrinking by 300%, your real dollar ROI is really negative or low. That same applies when you expand. You could also say, I want to expand the product. You spend all of your resources on it. You go to Uganda or Kenya, but the product is doing okay, but your home currency is actually shrinking, though the product is actually doing extraordinary without. So you need to think about that as well.
Yeah.
And one other thing, also, when we talk about expansion, you also have to think about none of the products that we are running are the same and are also completely translatable into other markets. So you can't do big scale agency banking business or US business in Kenya, right? Lending looks completely different in Kenya too. So the expansion story in Africa is a complicated one, because the users are different, the regulatory landscape is different, everything is different.
Yeah.